Thank you for joining me. I'm Alex, and I want to talk about Kroger today. So Berkshire Hathaway just released their quarterly numbers, and it turns out that they acquired a fairly large stake of Kroger. So I figured it's time to talk about it and see what I would do. What they do is retail. They are not really that big in online retail, and I'm not really sure what their plans are for that. Obviously, they will have a problem if they don't get into it at all, but I really don't think that Amazon is going to be much more of a problem than it is already. And so I think that unless Amazon plans to build more stores, that brick and mortar retail is going to get much more disrupted than it already has been. Obviously, there's a continuous shift from brick and mortar to online, and that is going to continue, but I don't think it's going to accelerate the way it had been. So, current price is $28.23, which gives them a market cap of $22 billion. Dividend yield is 2.24% with a payout ratio of 29%. So the yield is pretty much in line with what Walmart is paying, and I'm kind of referencing Walmart as a like company here. The payout ratio is much lower. Walmart generally tends to get way up there, over 75%. Their payout ratio kind of depends on what they're doing with the money at that point. Like if they spend billions of dollars buying Flipkart, obviously the payout ratio is going to get over 90%. But Walmart does still have some room to grow and some room to grow their dividends. So this is obviously much better though. Revenue, $121 billion, earnings, $3.1 billion. And in the past 12 months, both have been going down, and that is obviously not a great thing, and probably why I wouldn't buy the company at this point. They report earnings on March 5th, and you should probably pay attention to what they report then and what the outlook is after that, and kind of make decisions there. I don't think that at this point I would buy Kroger, but obviously Warren Buffett thinks different. So total assets, $38.1 billion, total liabilities, $30.2 billion, which gives them a total stockholders' equity of $7.9 billion, which is up from under $7 billion. So obviously that is growing fairly nicely. I'm not really in love with this balance sheet, but it's not terrible. The PE is nice, and again, Walmart PE is 36-ish. Walmart reports today or tomorrow. I think tomorrow. So pay attention to that, obviously, as well. But PE of 14 is pretty nice. The 36 that Walmart had is not great, and probably not good for a company that isn't and cannot be growing the way Walmart has. So obviously for a company with over $500 billion of revenue, growing at double-digit numbers is really not an option. Kroger, obviously not quite there. So there is some room for growth, but as is the case with retail, they would have to build more stores. Generally, it's hard to increase the same store sales by a whole lot, especially double-digit percentages. So if they wanted to expand, it would probably have to be new stores. And so overall, I would say for a dividend investor, this looks much better than Walmart, although with the yield pretty much the same, I would probably prefer Walmart. I'm not sure what the dividend yield is at right now. I think it's about $2.24 per share, something like that, at a share price of $115. So it's actually very close. But the payout ratio being so low, if they can stick around and maybe even expand, this would be much better than Walmart. But with Walmart, you can be fairly certain that they'll be around in 10 years and they'll mostly be making the right moves. So I would say even for a dividend investor, Walmart is something to consider, and Kroger, without more information, maybe the next earnings report, I don't think it is. Even though the PE is much better, and so the stock price could certainly improve, and it had been for the past year, for the past week or so, ever since it came out that Warren Buffett bought a lot of it. So I would say that for a value investor, this looks like a decent stock. For a dividend investor, this also looks like a decent stock. For a growth investor, this obviously does not look like a decent stock. But for both value and dividend investors, I think I would prefer Walmart at this point, at least until the earnings come out and we'll see what happened and what the outlook is for the next year. That's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.